you're online.
Hi, everybody.
You're online.
Thank you, Elena. I'm Valentin Preobrazhensky, CEO of Latoken. Hi, everybody. Oh, I hear you. Second screen. Thank you. Okay, so I'm very glad to meet you guys there. Many of you visited our blockchain economic forums in London, Singapore, New York. Now we can meet online and still have a great connection and discussion. I feel like we are sitting next to each other on our panels in a blockchain economic forum. I suggest we start from short introductions and a small exchange of views, what's going on and what kind of opportunities are there, what kind of ideas and business models can fundraise, and what kind of investors can invest in the current pandemic situation. So let me start from my short introduction of our recent developments and also of our view on the pandemic. Elena, would you mind if I share my screen?
I wouldn't. Why would
Okay,
I?
thank you. So to make it convenient for you guys, we collected a lot of statistics about death, treatment, economic impact, maps, and everything you should know about coronavirus. This is at latoken.com, coronavirus, and we can see that almost 500,000 Americans are affected, I mean deceased, and 17,000 died. Unfortunately, it's about yesterday's. No. So yesterday, this numbers amount something like 2,000 people are dying, and the reason why they die is about health system capacity constraints. In case if they do not get the patients do not get sufficient health care, such as treatment for their breathing systems, they die because virus destroy the way they breathe. And that's why there are quarantines to match number of healthcare seats with number of people who need this care. And the estimation is that without quarantine, critical care beds can be 100 times less available than needed, according to research done by so-called Ferguson Group, presented at London Business School. So they say that if there is no quarantine, then they took something it should take 3 months to get so-called group immunity. This means that half of the population will be deceased, and at the peak, there will be a very big shortage of health care units, something like 250, and this is for UK. So for other countries, situation pretty similar. So that's why a consensus is to introduce quarantine to widen this period when people are affected by the disease, and this decreased shortage of hospital seats. As a result, we see that economic activity is declining. Of course, it's about transportation at first place. You see that number of flights may be declined 10 times or more. So you see this real-time number of flights. These are mostly FedEx type of flights. There is no almost no passenger flights, and 6.6 million people are fired in the US. This is something like 10 times higher number than the peak of recession back to 2009, and stock market fell something like 30%. Still, it looked not as big number, but the pace, the speed of this decline is also historical record in recorded history. And some of the experts, including Goldman Sachs, they estimate GDP decline more than 5% in 2020 in the US. Goldman Sachs estimates minus 7.5%. Some of Princeton professors, namely Oleg Itzkoki from Princeton, predicted 20 to 30% decline of GDP in most of the countries which introduced quarantine. And this could destroy a lot of chains in value chains. So this could trigger defaults, this could trigger shocks of supply and demand. And this is the reality. And there are big companies which can have cash stockpiles. They can use it to navigate the storm. There are big companies which do not have cash piles, they have debt, and they probably could change their ownership or be rescued by governments. And there are startups, something like 100,000 startups are now cut from the rounds they expected to get. And they do not go to meetings with investors. However, they are agile, and they can change their business models fast, and they can create new products which could be very helpful in this new economy. Guys, what do you think? What kind of business models could be a great fit in this pandemic era? So I suggest you mention what you do and share your views. Who wants to start?
I'm happy to start. Yeah, okay. So just quickly, hi, I'm Michael Coletta from the London Stock Exchange Group. I lead our blockchain and emerging tech strategy for the group, and that's focused on how we can use fintech and the technology to solve problems around our existing businesses and deliver greater value to our clients, right, and the market more widely. And that role also has kind of a large focus as well on regulation. So it's not just about the technology, but it's about understanding the fundamentals, the big macro trends, right, and what governments and policymakers are doing, and how we kind of enable that. So just to quickly, because I'm sensitive of the time here. So what do I see as the trends and coming out of this coronavirus? I'm a little bit of an optimist. So while we do see the short-term pain, so as you kind of rightly said, you saw the 6.6 million unemployment claims in the US. What I would highlight, though, is that the governments are using fiscal policy currently to kind of keep the economies alive while we're not creating activity. So a lot of the unemployment claims, even in the US, are what we call furloughs, which are, we're going to leave our employees, they're unemployed, but they're sort of employed for us. And then they go onto the government payroll. So some of these unemployment claims may actually be much larger in number than in reality, because the government is paying these people. To that end, there's so much, especially in the Western countries, right? There's so much government fiscal stimulus entering the market. But the problem is we don't have the distribution channels. So, the Federal Reserve just announced another 2.3 trillion. I mean, these are huge numbers for small to medium enterprise. The problem that we have, and the problem we were trying to always solve with blockchain, was enabling small to medium enterprise to be able to raise capital, right, the same way that large companies could, and have scalability. So when you're looking at the market today, before it was finance that was the evil industry that caused the last financial crisis. However, right, it's the coronavirus is the guilty party here. So finance is not seen as such an evil, as the kind of the risk taker, right? The one that introduced the problems, but rather it's seen as the channel to get capital, to get funds, right, to businesses and people. And currently what we have in the economy when we're stopping all this work is you have pockets of cash, right, where people have too much cash because they're not investing and not spending. Other people are lacking cash. And you have lots of physical stimulus entering. So I think there's a huge opportunity for fintech companies, right, to come in to provide some of those solutions around how do we distribute and track funds to the end recipients, right? And that includes small to medium enterprise, individuals. Secondly, the regulatory environment is likely to be lessened because of the need to quickly create stimulus. So you'll see some of it won't be so great, right? Like deregulation on pollution, right? I'm sure that in the short term, right? But you'll also see that for things like big tech. I mean, you look at China and how they used Alipay, right? And the QR code to track your, you have a QR code to track if you are low risk, medium risk, or high risk for coronavirus. But I think what we will see is that big tech like Google, Facebook, those kind of guys, which have lots of cash, right? Will be providing solutions for governments, right, and for institutions. So I think you're going to see a huge proliferation of technology companies, big and small, coming into the space to help distribute funds, get the economy going, and basically in a regulatory environment that is now friendly to them. So I think there are large opportunities there. Yeah, the fundamentals are still strong. So that's my broad perspective.
I'm gonna piggyback a little bit on what Michael was saying. I think what we're seeing is like we're gonna live in a post-virus world, and the post-virus world is going to be significantly different than the pre-virus world, essentially. You know, what he was mentioning earlier about all the stimulus coming out, and it's very difficult for them to, you know, actually get these dollars into people's hands. It's much different than like the way that money supply is created, right? Like the money supply is just created by digitally creating a bond and issuing that bond, and that's it. Like that's already money is abstract. Money is like fictional, if anything. Money is just a concept for us to exchange services and capital, and it's just like a social contract at the end of the day. But now we're seeing even developing countries. Recently, I saw that Pakistan itself has developed an app to monitor in small municipal counties what's going on with the coronavirus, and they're also doing like literal cash payments. But the issue with these cash payments, and it's actually goes into the coronavirus, is people do not want to have physical contact. So if you were creating these hotspots where people need to go and wait in line to get cash, you're actually worsening the problem, you know, because now people are getting exposed to one another. So my personal opinion, we are going to see digital currencies come to fruition pretty soon. Money already is digital, essentially. You know, most of us don't have cash, and we're even seeing commodities crash less than equities are. And I think people are realizing that, you know, in the future, we're going to be a very scientific driven society. And, you know, in 50 years from now, when we're hopefully able to mine asteroids, we're going to destroy our own commodity markets with oil gold and precious metals. So programmable money, smart capital is the future. And that's what blockchain enables you to do trustlessly. And the data integrity is the most important part, because now we live in a cyber warfare era, and then we don't have to worry about people's databases being breached and, you know, numbers being changed in databases. Everything can be done trustlessly with a greater degree of transparency than we've ever seen before. You know, I don't need a CPA to audit a blockchain. I can kind of see what's going on, the inflows and outflows of everything. And, you know, the regulatory environment is the big thing. The way that the monetary policy is being set up right now is essentially telling people to put their money in riskier investments. And that means, you know, moving into emerging markets. And, you know, we'll see a huge, in my personal opinion, a huge explosive growth in tech, but tech that's oriented towards life sciences, towards fintech, in really integrating technology into our daily lives. But right now, times are difficult, but this is the time to build the society for the future. This is, in my opinion, a huge inflection point for the trajectory of humankind as a species.
I'll jump in after you. So I'm Tony Evans. I'm co-founder of FGC Group out in Japan. We do basically mergers and acquisitions and buying bankrupt fintech or blockchain businesses and repurposing them for around the world for new projects and helping investors. We are viewing this, I know the severity of the coronavirus is severe from humankind, but from a fintech is an opportunity. We're viewing this as the world has had over 10 years of continuous growth. Okay, the speed that this has happened because of technology. Okay, technology has allowed trading to go quicker, but also it's allowed information to flow. So the way we're viewing it is where the situation we've seen we're going into a bad situation, but there's going to be so much more opportunity coming out of this from the fintech, from medical, from data, just as Michael and Soban just mentioned. There's the opportunity. The world has never gone backwards, so we just have to look at this for solutions. I keep on saying the same emphasis is water gives us life but also kills us. It's the way we view things and the way we see the opportunities and how do we come out of this. So just as we've all been into different LA token conferences, you evolve to survive. Okay, the conference has now gone on digital and it is growing and becoming successful. So you've evolved the current situation, and I think if investors look at that, real assets is a huge opportunity. Okay, cryptocurrency, the blockchain is a huge opportunity, but also the having technology is going to allow us to actually distribute the whole money that's sitting in the system. Before, people have to go and get the money. Now people have the money on their mobile phones. I think there's a huge amount of lessons to do we can learn from Africa, because this has been a place where crypto and blockchain has developed so fast. So I think we have to look at this in an opportunistic point of view as investors to help the problems now, but also view the future.
I also see that there will be a lot of new opportunities, and this definitely accelerate also many new things, and especially many digital services. At the same time, I think that I'm more skeptical with these talks that the world is totally different after this, because I think that quite often people want to see that certain moment is a kind of total turning point, but in the end, I think that many things with human beings and in the world will be the same also after this situation. But of course, this is always the point that people, for example, learn to use many new services, and in that way, it's good time to introduce basically new things to the market, and definitely there will be some services that will be much more important after this than they used to be earlier. And then, of course, there will be many businesses that also basically collapse during this time, and it means also new opportunities for some other companies, and maybe also excellent opportunities to make acquisitions and that kind of thing, so that basically, for example, new companies can also acquire, for example, existing companies and brands and so on. So that it's definitely important point. And it's important to try to find solutions. I think that the big question mark is the timing. We have no idea how long time this takes, and the timing is always the complex question in the business. So that if you want to make any investments or basically try to get new business, you must also somehow be able to estimate the timing. That, for example, you don't start to make too many new things before the market is ready to do something. So that I think that with timing, everybody must be very careful.
Yeah. So I'd love to believe you reminding timing. I'm connecting from Spain, and we do miss the possibility. We do miss the possibility to go out in the streets and go back to our lives very, very much. So I do agree with you. I think that that the world will not be completely different, but some things will change, right? In terms of investment opportunities, what I think is investments will become more selective, right? I don't think money will disappear as as you were saying before, I mean, there's a lot of liquidity, there's a lot of opportunities. The stimulus is going to make it even better, right? Even bigger. I think there will be sectors that will enjoy better opportunities, right? Particularly those sectors that relate to the digitization of things. Fintech and the financial sector is, I think, one of those, right? So banks were digitizing, right? Well, this is the perfect incentive to actually do it faster. So it should be definitely a very good opportunity for fintechs, right? The digital nature of money that we've been talking about in the past years that is enabled by blockchain and other technologies. This is just another reason to do it, and to do it as fast as possible, right? Just to I mean, my name is Julio. We used to work for Santander, and I used to chair the Enterprise Ethereum Alliance. Then I left and I built my own. I launched my own fintech business. It's called Adara, and we help Finality, among others, to create central bank-backed tokenized money that is going to be used in wholesale banking initiatives. Well, the work has never been stronger and more important. Right, so all these fintech initiatives, all the discussions with venture capital, nothing is stopped. Everything is even speeded up. Right, there will be venture capitalists that will be, busy with their portfolios. So, but that is temporary, I would say. Right, there will be other venture capitalists that do have money and they have to invest, and they don't have a lot of time to spend with the portfolio companies. So those would be probably the ones that would be going to talk if I were raising money. But sectors that do, that are based on digitization, that are working towards the digitization of service industries, and definitely the financial industry is one of those, I think, are not going to disappear, not going to dry up. And we are seeing, I mean, we've not even stopped any of the processes we had and we've seen, and the demand and the offer, it's still quite strong, I would say. So I essentially concord with you guys were saying. Just wanted to add a couple of points of view from our personal life.
Okay, guys. I think we have something like 5 minutes to add some more ideas. What kind of pivots can be great now? I would highlight our refocusing from offline roadshow events definitely to something more like online venture capital television. It's like Bloomberg for venture industry, where we are making interviews, we are making panels like this, and of course we bring startups to pitch their projects. So it will be a 24/7 TV streaming with interviews and pitch competitions. And I believe this is a missing part for the new tokenization economy. This missing part is this roadshow with book building and a platform where great projects can access millions of potential investors, and these investors could be those who have cash but were not in the angel or VC industry, some top managers, some high net worth individuals who do not have much time to attend all of this and social and networking events to build deal sourcing channels, but they have understanding of their industries, they understand technologies, and they understand clients, so they could be smart investors. So, and today's our challenge is to bring our greatest projects, which previously were able to fundraise from venture funds, and they had a pretty rich choice of investors. However, today they don't have access to them. That's why they are coming to us and try the new ways, the new way to fundraise. now I feel there is a momentum to propose to them something which is 10 times better than they have now. What do you think, guys? Is there a future for online venture capital markets like this, like these shows and startup competitions followed by these shows?
So,
hi, this is
actually, go ahead. All
right, thanks. This is Habeeb Syed. I'm a corporate and securities attorney based out of DC and head of the Global Government Blockchain Association's ICO and STO working group. I think you make some great points, Valentin. Even going forward from this epidemic, we're obviously going to be looking at very scaled back networking events. I don't know when we'll be able to all get together at another BEF sometime soon with a few hundred people together. I know Microsoft announced that it's canceling all its events till next July 2020. And I'm imagining a lot of people are going to follow suit. At the same time, I was reading some survey of New York investors, and about 50% of them said they'd be scaling back investments to everything but startups they'd already put money in. And a few were just going to cease investment altogether. So I think that the ability for investors to find a platform where they can have vetted startups and get access to these online, to be able to do their due diligence, to be able to invest money, and in some cases, perhaps that requires smarter money, right? We're talking about cryptocurrency or something like that, as opposed to dealing with fiat. I think that's going to be key. What's also, I think, very important going forward is that there's always opportunity when it comes to a downturn like this. And retail investors are often left in the lurch because they don't have access to the same markets that more sophisticated and more wealthy investors do. Moving the venture capital market online, I think, provides a great opportunity for retail investors to also get in on the gold rush that's going to come inevitably once the market bounces back. And hopefully Law Token and other platforms are going to be well positioned to allow this to take place. From my perspective, I look at it in terms of how regulations are set up to allow this to happen. And I think, on the US side, there's already some leeway being granted, and hopefully the current regulations in place will allow online marketplaces like this to exist. There was already amendments to Reg CF, the crowdfunding regulation, that were going to greatly increase the dollar limit there. And hopefully this pandemic shows the need for these types of regulations and for the changes to our capital formation system that are required in the future.
Maybe I can, if you allow me to jump in here, because I'm an investor. So my name is Carlos Diaz. I'm the general partner of a seed fund here based in San Francisco named the Refiners. By the way, I was in the process of raising our second fund, and when we got hit, by the coronavirus, so as you can imagine, raising a fund, right now is not the right moment, so we had to freeze, our initiative of raising, this new fund, what is pretty frustrating, right now. So I just wanted to jump in here because you're right, that the way we are going to do investment is going to change. But it's not going to change in the near future. It's going to take time. What we used to say here in San Francisco is that investment is done. That it's over. The way we were doing investment before is over, and the VC money is drying up. Right now the business is going down. The startup moral is very low. Right now. Startups in San Francisco are doing a ton of layoff, right now. Last week, we were talking about an average of 20 to 30% of the workforce being laid off, and this week is more about 40 to 50%. And it's not only intermediary, startups, laying off, but right now we have startup like Eventbrite, people like Tesla, laying off. So the moral is very, very low, right now. So about making investment, and you all very optimistic, and I appreciate that, but making an investment online, I don't think that will happen, very, very, very soon. Everybody's saying, yes, we still open, we still doing business, we still making investment. That's a total bullshit. That's not going on, right now. Nobody's making new investment right now, and it's going to take time before we do new investments. Maybe the first sector that's going to start making investment again is going to be the pre-seed and the seed sector, because yes, you can make a check of $100,000 or maybe $500,000, less than $1 million, with just a conversation online and with a video conversation or with information just online. But if you're raising more than $1 million, if you're raising $10 million, $20 million, $30 million, if it's a Series A, Series B, or Series C, this is never going to happen online. And yes, the business is global, but the trust is local, and we need to see each other. We need to meet together, for making investment. And right now it's impossible, and it's going to take time. And before we move to a platform online, before we change the way we make investment, before we change the way we evaluate startup and we close deals, it's going to take a long time, and it's not going to happen, in the next few months. It might happen, in the next few years. But by the way, I think we are in this crisis, for not just few months. We are in this crisis for several years. If we look back, all the financial numbers and the stats, that we are in a recession, right now. Every time we got hit, by the market by more than 15%, we enter a recession. And that's where we are, right now. And if you look at history, we never got back, from a recession in less than 3 to 4 years. That's the numbers, it always takes 3 to 4 years to get back, to the previous, situation. And by the way, this crisis is with a magnitude that is even bigger than the previous one. So my take is that, yes, it's going to take 3-4 years, right now to get back to something normal. Yes, in the meantime, maybe we will invent new way of making investment, because there is a lot of money, there is still a lot of money, there. That's true. I estimate that in Silicon Valley, there is still, maybe around $150 billion, right now of cash, investors have $150 billion. But one thing you didn't mention is that it's very difficult, for these investors right now to make capital calls to their LPs. And because it's very difficult for them to make these capital calls, that's why the money is drying up. You have funds, right now that, yes, they raised maybe $200-300 million. That's what they said. And everybody believed that they had these $200 and $300 million. They don't. They have a commitment of $200 and $300 million, but every quarter, every year, it depends, they make capital calls to their LPs, and we already seeing, right now in Silicon Valley, that these capital calls are very difficult to do. And of course, yes, they're going to postpone, these capital calls, because they don't want to hurt their relationship with the LPs. And that's why the money is drying up, right now. And you can put a platform online. If the VCs don't have this money, doesn't matter if it's in real life or online, they won't be able to make these investments.
Oh, those are excellent points. I wanted to just quickly chime in. And I totally agree on the that we're not magically going to recover in 3 to 4 months and everything's going to change. I think, again, some of where the opportunities are, though, and what some of the problem is around recovery, given the fact that there's so much government stimulus, is that it's the distribution of capital, and it's connecting the capital back to risks, right, and investments. So what we never want to introduce either, right, with new forms, even if we do get to a point of more online capital formation, is we don't want to create new bubbles, right? We don't want to, out of the stimulus that's coming in from governments, sure, we're going to have they're going to make it rain with cash, but what we don't want to have is then a subsequent startup bubble, because you have all these businesses that were giving cash that were never, you know, effective, right? That were bad business ideas. Of course, there's always risk, but we, you know, don't want to introduce those new risks. So, you know, and I do disagree a little bit on the cryptocurrency is going to take over. Guys, who is giving all of this the stimulus to the economy? Is Bitcoin donating Bitcoin to
Absolutely.
coronavirus funds?
Yeah.
We're all sitting relying on our governments, right? We're all depending on our governments, and they're just, you know, throwing cash everywhere, right? That's why you saw even commodities. Everyone went to US dollar. It's like, get liquidity now, right? So I think, you know, just keep in mind, and I'm always one of principles, keep in mind the fundamentals, right? Yes, there will be a loosening of regulation, a more, I think out of the back of this, because we have time to sit and think, a reflection and a loosening of regulation that, or an acceleration of some of the technological developments that will help some of this, but always reminding ourselves that we don't want to introduce new risks, right? We don't want to create new bubbles. We want to protect consumers, and we want to protect investors so that they know the risks they're taking and making those investments. Those principles never go away, ever. Okay, that's all.
Just a couple of quick comments that, first of all, I also feel that the timing is now very difficult to say. It might take much longer time than we can think at the moment. At the same time, it's good to remember that this is especially now consumer demand crisis. At least yet we are not in the finance crisis. And if the consumer demand comes back, it can help, but it's very difficult question. I admit that. I'm also more skeptical with the online platforms, especially for the startup investments, because I have been in that business also earlier and seen that how many challenges there are, especially with the early phase companies. It's never easy. At the same time, I must say that at least my experience is that the venture capital market is not totally dead at the moment. For example, one of our companies just got very significant term sheet so that the company and the investors never met. But at the same time, I admit that it is very special case because it is the company that is that is, I would say, exceptional promising, so that even the top level Silicon Valley investors are very keen to get a deal. But as a whole, I totally agree that it is much more complex at the moment. But it's really hard to say the timing how it comes back.
Jouko, what is the biggest challenge for crowdfunding platforms today?
My personal experience with crowdfunding platforms is that it typically takes much more work basically to get a deal to be successful than many people expect. So that it's basically that you must find also the leading investors. You must make almost like a kind of investment bank work from the platform point of view to get a deal to happen. And when the probability is very hard to estimate for startup investments and the ticket size is typically small, I feel that one of the challenges have been that how to make this kind of platform business, crowdfunding platform business really scalable. Because if you take all cases and basically it's totally open free market, then it's too busy and easily can happen that none of the deals happen. So that you should be able to keep the quality, but at the same time you should make it very automated, very effective, and it's not easy, but maybe it's possible.
Okay. Carlos, you mentioned that investors just wouldn't invest independently online or offline. What about the new type of investors, high net worth individuals who have some cash, maybe they have some oil, cash coming from oil or from their top management salaries, and they believe in technology, they know some of the clients, their pains. So what about the new type of investors come into the space.
Yeah, but there is new type of people with money, and that's true. But the problem is that they're not investors. I mean, they don't know anything about investment. I mean, investment is not just about having money. It's a real job. I mean, there is a process, you know, being an investor. What is the job of an investor? It's identifying, you know, new deals, okay, having a deal flow, all right, evaluate startups, close deals, and support, you know, entrepreneurs. These people, they don't have this process in place. They might have the money, but they don't have the deal flow. All right. And it's very difficult, you know, for them to find the right startups, you know, and identify, you know, the right startups. Now you might say, yeah, they can find these startups online on platforms and stuff like that. Just a minute, you know, I mean, this is not how it works unless the platform is the YC platform that is basically creating, you know, the best startups, and it's a question of trust. Everybody trusts in YC to identify, you know, the good startups and put them online. I don't know if you saw, you know, what they've done, you know, with the last batch of startups. You know, they did everything online. And by the way, they did it pretty well because they did it just 1 week before the lockdown, because they knew that startup won't be able to meet in person, you know, with investors. So they did something online that was, by the way, a little bit pathetic, you know, but anyway, but it was kind of a Tinder, you know, online, where every startup had one slide, you know, to introduce themselves, and investors were clicking, you know, and liking the startup they like and the startup they didn't like. But what I'm trying to say here is that there might be people with money, but they need a proxy, or they need a process, or they need a team to identify, you know, the good startups. And also, another thing is that it's a wartime, you know, right now, and I think that the good startup for the future, they might not exist today. I mean, it's a very different moment, you know. Everything has changed, and we need a new generation of entrepreneurs. And these new entrepreneurs, you know, that are wartime entrepreneurs, are building up, you know, right now. So this needs time also to see the real entrepreneurs, not the shiny entrepreneurs we used to have before, that were very good, but in a context where there is a lot of money, you know, for them. Now we're in a very different context, and we're going to need a very different kind of entrepreneurs. And that's going to be very difficult also to identify them, because they are more like cockroaches. I mean, that's that's the kind of entrepreneurs we need, you know, right now. Cockroaches, not, you know, the shiny one, not the unicorns, you know, beautiful, you know, kind of entrepreneurs we used to have before. I mean, let's be honest, we were living in a lie. Okay, that's what we were living on, you know, before, and now we got hit, you know, by reality. We get back, you know, to very basic stuff, you know, right now, and it's a fantastic time for real entrepreneurs with the wartime entrepreneurs mentality, but it's going to take time for them, you know, to come, you know, with something interesting, with a very different, you know, maybe business model, a different structure of cost, different valuation and stuff like that. So yes, people with money, great, perfect, but they're not investors, and they're not.
Carlos,
they're not.
Carlos,
Yes.
What about a generation of entrepreneurs that is composed of industry veterans, people that have spent 15, 20, 25 years in their corporate careers? Because those people are not cockroaches, I would say.
No, they are dogs.
They all right. But people in their 40s or even in their 50s that have that career experience, they do have the connections, for example, with corporate venture capital, and also with people that don't need to be screened as, you know, recent graduates, as you used to do in the venture capital industry, particularly in the Silicon Valley. So I would say that is a segment that had already started. I come from the banking world. I'm an entrepreneur in fintech. Fintech is not about creating shiny things and new business models. It's about understanding the regulation. It's about understanding the business model and the importance of the compliance, risk, resiliency in IT systems, and all that very boring stuff. But definitely there is I would say there is an opportunity for that segment, particularly in this type of sectors, and particularly in a moment where digitization is actually an important trend, right? So I would still, I generally agree with you, right, that definitely the old way of doing these things for the general purpose type of entrepreneurs does need a big revamp and will need a big adjustment, as you're saying. But at least this segment, I would argue that is something that is not entirely lost.
Yeah, that's a good point. I think that we're going to see tourist entrepreneurs, and we had a lot, before, and tourist VCs, I mean, all the corporate venture capitals and all these guys, we used to call them tourist VCs, I mean, when the sun is shining, when everything is fine, when the weather is great, they're here. And when it becomes to be messy, and the weather is getting bad, they like tourists, they leave, and that's the same thing for entrepreneurs. We had a lot of tourist entrepreneurs and a lot of tourist VCs in our ecosystem in the recent years, in the last I think that since 2014, I would say, so in the last 6-7 years, and these guys are going to vanish. So you're right, maybe people from corporate, if they lost their job, and if they're not tourists, I mean, if they accept, to leave like cockroaches, because that's the life we have in front of us, I mean, that when there is this kind of comet, hitting the world, the big guys, the dinosaurs are the first, to die. Okay. And the one that survive usually are insects, and that's the kind of people we need, right now.
Okay. By the way, I think some of the tourists, they become successful, like Warren Buffett. I don't think he had a big team to analyze balance sheets. He done it himself.
You think that Warren Buffett is a tourist?
No, but he started from a point where he didn't have any team, right, here to analyze balance sheets. And because the public market is more easily accessible, it was easier for tourists to become proficient and became this type of success stories. And the same could happen with venture capital. There will be many tourists, but some of them will be the new stars, which wouldn't rise without this new access via online pitching, via online debate like this. So I think there could be a participant who see your point about these problems of deal sourcing, analysis of startups. He will or she will count this in and find her way to detect the right technology and team, which could fit the problems, the pains which she or he knows needed to be solved. So I think this is about funnel. The bigger number of people can access it, the bigger chance the right talent to get in the game and to play it at a new level. So guys, thanks a lot for this discussion. I'm very happy that we started this. I encourage you to join our next discussions. By the way, you can host one of such discussion. You can invite people you want to have a panel with and make your own panel. Elena can help with this. Think about this. This is a great chance to become a TV star, right? Or to find those who can challenge or support your ideas and help them to come true. So thanks a lot, guys. I'm passing the word to Elena. Elena is running startup pitch competition. Thank you.
Thank you very much. I'd like to ask all the judges and speakers to please start scoring the projects using the Google form you have. And I would like to ask our first project, Artur, and I'm sorry, I don't have physical ability to pronounce your last name, but it's written on our website so everyone can see it. I'd like to ask Artur, CMO and co-founder of GamerHash, to be the first one.
Thank you, Anna, for this introduction. My name is Artur with very hard Polish surname Pszczółkowski. First of all, thank you to all panelists for your insight. Probably it will be quite hard to jump in with the pitch after what Carlos mentioned, but definitely it was very insightful. So thanks for that. I'm representing project GamerHash. Please confirm me when you see my screen sharing.
Yes, we can see it.
Perfect, awesome. Yeah, so after this discussion about COVID-19, I'm quite happy to say that in our project, we see that actually in the last 2-3 weeks, there is increase of contact from VCs, that there's much more interest coming from their side, that actually we see much more people coming to our platform, which is actually gaming platform. So the whole situation with hashtag stay at home is actually giving us additional boosts, and we hope that actually we will be able to use the momentum. So the GamerHash platform was built 2.5 years ago. The project already exists. The platform is handling already 450,000 gamers, and we are award winner project. So what is really about? So the whole idea is that there is huge electricity loss coming from idle CPU and GPU of gamer computers. So what we are doing is quite connected with, if you can remember, SETI at Home project. So we are integrating idle CPU and GPU into huge cloud computing, and actually we are channelizing that into mining crypto. So our gamers don't even know what's there, what's our secret sauce, and what kind of cryptocurrency they are mining. They are just interested in getting some incentives, which they can then use on our marketplace. And over there, we have more than 600 digital products. For example, gamers can buy their Netflix account, or I don't know, Fortnite bucks, or pay for games in Steam. So there is a wide variety of different products. After some time, we saw that actually there were so many people coming, and not all of them were staying with us. And we found an issue that actually not all computers, not laptops, were good enough to mine crypto. And we came to the conclusion that we need to find a solution for lower end computers, and we created Play and Earn module. And in this module, it's probably like affiliate system with gaming. So we are paying our customers, our gamers, for playing games. So we are paying for entertainment. And these are, together with mining, 2 ways in people can earn money with us. What are our USPs? Uberization of crypto mining. So Uberization is, of course, very trendy word, but actually we are allowing people to mine crypto without really knowing how hard it is. There is no expertise needed, just a small piece of software and everything is running. We are ecological in a way that we are using idle electricity loss. We are not asking our people to keep their computers switched on, but really to use what's being lost and try to get something out of that. As we don't have much time, I will jump into potential. So I think that over here, most of the people will know that gaming is one of the fastest growing sector right now. It's being said that each 1/3 person on the planet is a gamer right now. That, of course, includes Africa and Asia, with a very rapidly growing mobile gaming. And on top of that, we are connected with the blockchain. So we are really trying to connect both worlds, which are very perspective. Currently, as I mentioned, we have around 450,000 gamers. Each day right now, we are getting around 400 to 500 gamers with no marketing spent. People just pushing to get to us. At some point, we are not even able to handle all the traffic. By the end of this year, we would like to have more than 1.5 million gamers on our platform, but all our Asian contacts are mentioning that this is a very conservative number. A few numbers as in pitch deck. So a gamer with a very good computer can earn with us monthly, on average, up to $50. Usually it's between $30 to $30. In our marketplace, we have more than 23,000 transactions. So it's already up and running. It's working very well. And on the blockchain transaction, there is more than half a million transactions happening. So people are exchanging crypto that they have earned together with us. We have 3 revenue sources. First is mining fee. It's between 2 and 7%. 0% is special case for ASIC miners. In our marketplace, we have an average 20% margin, and in Play and Earn, it's a revenue share based on the affiliate model, so also it's between 20 and 30%. These three segments together are creating our income. What are the plans for future? So as we are very active in Asia, we know that we need to start our operation there. We have very good market fit on this market, and if we were managed to get that far in Europe, in Asia, it should be even better. Second topic is building loyalty of our gamers. We know that this is our weak point, and we need to improve on that. And especially for that, we are preparing our gamer coin token. On that, I will say a few words in a second. Later on is developing Macos system and separating our affiliate model as a separate brand. We had our expansion to US, but probably with COVID-19, we will not be able to do all of that in 1 year. Our team, so I think that all of them are together with me on that call. So we have Patrick, serial entrepreneur and gamer by DNA. We have Mike Pszczółkowski, owner of the biggest cloud computing system, quite computers center in Central Eastern Europe. He's working on servers on daily basis and also see very strong potential in GamerHash when it comes to computing power. I'm experienced in huge corporation as a head of digital for a number of years and also co-founder in the project. On advisor side, we have Filip Nałkupski. Maybe some of you know him. He's one of the best CSGO players worldwide. And actually, he's our gateway to get to gamers, which usually are very hermetic. But with him on board and with his endorsements, we are really getting our pass to this hermetic gamer environment. Besides that, we have a number of advisors worldwide. We have people from San Francisco, Singapore, also Europe. Really, we are covering the whole world, and our focus is really to build local communities.
Thank you very much, Artur. Thank you.
Yep.
I would like to ask our second project to join us, Miguel Basurto, CEO of Neural Capital.
Thank you.
Hello. Thank you very much, Elena. Give me a second, please. Okay, ready. So I'm Miguel Basurto. I'm CEO of Neural Capital. We've been scouting and started real estate development in the Riviera Maya here in Mexico. Through this time, we've been also working a lot with the evaluation of the different big lands, and actually something that really passionates me is the real assets, and this is the effect of this presentation. So a very big problem in the world is that there are very big pieces of land with a very big value, but there is a big difficulty to be able to sell those pieces of land. But the value is there. So this has big landowners have had very few strategies to liquidate some or all of their position, like partnership, which is very low liquidity rates, which are expensive and focused on income producing assets, and development. So they would need to have a lot of more money to be able to develop and sell these places in smaller lots. As a result, historical big landowners have remained. So for this, we are focusing on very big lands. This, you can see these green spots, particularly the Mayan Riviera is the one that will take the first stage of what we're working at, which is called Núcleo. So Núcleo is a solution for this problem. The problem that this Núcleo is a security token backed by big lands or big value pieces of land. This way, our partners that will contribute to their lands will be able to access more liquidity, which will give them more access to the use of this value. They will be able to decide on consumption, investment, and saving horizon. They will amplify that horizon, so that's a very good and interesting thing. They will have capital gains since they will be able to sell from whichever amount of their tokens they want backed by their lands, which are actually a very interesting asset class and is required right now. And they will be able to access high-level financial services through Neural Capital and other partners around the world. So as you can see, this map is all of our target lands. We're talking about at least we could do easily 2 Liechtensteins of this land that we are targeting. And so how does this work? So the landowner gives to the trust with the right of reversion their property. If we receive more than 50 million US dollars in land value, then we go to give the fiduciary certificates to the company incorporated in Cayman Islands or Luxembourg, which gives the security tokens to landowners. And if we don't get to the 50 million land value, we could only give back. We are only giving back the land to the owner. So after this, of course, this is the interesting part. So the landowner and the company considering Cayman Islands or Luxembourg will send the tokens through that token and sell it to the investment public, family offices, private equities, VCs, qualified investors, and massive population. So which is our target? Our target is 80 million US dollars in our first stage. On a very, very short term, we're expecting at least a 50% conversion of that 8 million US dollars land worth. Our second stage is 87.9, expecting a 60, which would take us to plus 52.7. And once we prove to be able to give this an actual good liquidity to this value, we would be definitely and without any trouble getting immediately to an 871.6 land value into the token, which at a 70% conversion, we're taking at least 610 million US dollars for a total of 700 million US dollars on land value only to start with. So obviously our first stage is we selected small pieces of land, strategic pieces of land that can be executable in different ways. So our initial investors are able to take an exit in case of this doesn't flow as it should. But I'm pretty sure that we'll be able to go much further, since we're giving access to an asset class that is required and stable. So how will our investors profit? So they will have stable value appreciations as the land we know behaves, and for giving as a liquidity premium, we're giving a discount to the landowners for 25% and another 25% as an investor incentive. So why is this able to happen? Because it's easily, if you have a land worth at least 300 million US dollars, you know that's the actual value, but how much people can actually buy. So that's the liquidity premium, and that's why we add obviously a 25% investor incentive. So we're starting with these pieces of land. We're talking about the Riviera Maya, places where the tourism is very big. There's a lot of money inflows constantly, one of the biggest touristic destinations of the world, and one of the most important revenue sources for Mexico for foreign currency. So this is a simple way to see it. So the assets value for the first stage is about 80 million. We're going to put it at 45 million on the token. We would have to get at least 4.5 million as a liquidity way and a development for 4.5 more for the development of the whole project. I actually believe that with 2.25 million US dollars, we would be definitely up and running correctly with this digital asset everywhere. Sorry, I don't know what happened here.
Miguel, sorry, your time is up.
Yeah, okay, good. Okay.
Okay, so it's been 5 minutes. Thank you very much. I'd like to ask Soban Saqib from VectorSpace to join us.
Oh, all right. I am sharing my screen. Can you guys see that?
Yes, very well.
All right, perfect. I guess I'll start then. Hi guys, I'm Soban. I'm a market research analyst here at VectorSpace AI. VectorSpace AI is really exciting startup coming out, really in the cryptocurrency space. But what we focus on is creating on-demand correlation matrix data sets using natural language processing and natural language understanding for finding hidden relationships across data sets and training artificial intelligence systems. Now that's a lot of buzzwords, but I'm going to explain what all that really means. But what I want to start off with at first is to introduce our team. I want to know if you guys can see this. I can't see my own screen. It's gonna, 1 second. Do you guys see, did the slide change?
Yes, we see it.
All right, perfect. So, normally VCs take 2 different approaches. They either invest in a team or a product. What I think is unique about VectorSpace is that we have a great team and a great product. So starting off with our team, very experienced individuals. Our core team, Cash and Franks, he's our CEO, but also a technical co-founder. So he actually cuts code. He doesn't just sit around. They started off at the Lawrence Berkeley National Laboratory, working with the government of the United States, Department of Defense, Department of Energy, on tons of exciting projects, focused around leveraging technology to solve problems, anywhere from life sciences solutions to anything having to do with energy efficiencies stuff. I left then to start a startup that actually powers Spotify. Everyone uses Spotify. We wrote the original searching algorithm for that. They went on to win the R&D 100 award. They created the word2vec feature, which is used very often in creating feature vectors in machine learning, which just means processing data and pulling out keywords and creating correlation matrices out of that. Mike, our CTO, he just really go-getter. He's executed on projects before. I took our previous startup from a simple idea to an active platform with 50 million users. No small feat at all. And then Caleb, he's one of our lead scientists, really has his heart and passion for data science, AI, machine learning. He's always keeping us up to date with new features on the engineering end and cryptocurrencies, emerging markets, and how we can leverage new technologies. Now, I'm going to break down essentially what we do. We create data sets for whatever context control you have. It could be anywhere from, for instance, right now we're working with Amazon to provide data sets that will assist in tackling COVID-19. So these data sets are focused on repurposing drug recipe compounds and pharmaceutical recipes. Similar to how it's much easier to remodel your home, it's much easier to repurpose a drug than it is to create one from scratch. But at the same time, we have worked with WorldQuant and Elastic and have created our own baskets of currencies or stocks and equities, either long or short side, that have outperformed the S&P, and we can leverage our context control and our NLP, AI, machine learning technologies to search for alpha in financial markets. So wide range of use case there, but essentially how the platform works is you pay for it in a subscription model. It can be in BTC or ETH or USD. That is then exchanged for a certain amount of VXV, the utility token. That token is then held in obviously a wallet. And this wallet actually functions as an API key. From a software engineering standpoint, it's a one-to-one match. Your public key and your private key are the same as an API key and a secret key. And then our data sets are then distributed to these wallets that have the API key for these data sets. But what's important about this is the reason why we use a blockchain, because it's always about blockchain needs to add something. You can't just be, everyone wants to get into crypto and blockchain, create their own token, but what does it solve an issue? Does having a token solve an issue? And for us, it really solves many issues that are faced, that software engineers are faced with, from troubleshooting all the way to the data provenance. Each transaction is hashed on a blockchain, so we can actually see where the data is going, what data sources there were, what calculations there were, and the highest integrity database or highest integrity data structure is a blockchain, of course, and this allows everything to function autonomously and trustlessly while ensuring the security of everyone on the platform. So these are some of our current partners. We're also partnered with Elastic, and we've struck a distribution deal with Amazon and Microsoft. We are getting currently vested by Amazon's internal team for an investment, so I can't really put them on there, but really exciting things going on for us and what we're doing. And the market opportunity here is huge. This quote is particularly something I'm fond of. $10 million per data set might seem like a lot, but if you're making 100, 10 million doesn't really feel all too bad. But the beauty of what we do is these hidden relationships in AI and machine learning can be applied across all sectors with obviously varying degree. But what we can see here is that we're not just limited and pigeonholed to one thing. Our technology, our tech stack, our algorithms, everything that we have proprietary, created proprietarily can be leveraged across different industries. And, you know, we have the, excuse me, we have the experience and the know-how, the technical know-how to actually do this. Our CEO worked with Andrew Ning. He, you know, is the founder of Deep Brain Learning over there at Google. Word2Vec, what I mentioned earlier, used by Google a lot. Some of these patents you can later look up on, they are referenced very often. So, you know, we are merited to do this. You know, it's not a far-fetched idea. This is a little bit of a oversight of how our company works overall.
Soban, your time is up.
Oh, okay.
Thank you very much. And I'd like to ask Charlie Uchill, CEO at CERES, to please join us. Charlie?
Hello?
Hi.
And then I gotta figure out how to share my screen. So
Do you see a green button with share screen on it?
missing that right now. There it is.
Okay, so I have 5 minutes. Please go ahead.
All right, so there's some, I think for Carlos, if he's still there, I'm the definition of the cockroach. We've worked really hard with CERES. We're a financial services company for the legal cannabis industry, having spent the last 2 years working with the SEC to become the third ever SEC qualified digital asset and the first SEC qualified stablecoin. What is CERES? Again, financial services company right now for the legal cannabis industry, really with two core businesses. One, a real estate lending business for that industry, and then a blockchain-based transaction network for the cannabis industry. Cannabis industry here in the US faces a dilemma between it's federally illegal and then legal in 34 different states with different laws and regulations governing it, which makes financial transactions incredibly, incredibly difficult. Part of that reason it becomes it's such a heavy cash industry, leads to problems to include money laundering, tax evasion, fraud. And then lately, because it's such a higher reliance on cash is not only dangerous, but you know what we've seen in with this COVID-19, it's also dirty and dangerous in that way. Again, just one more highlight of that from one of the leading operators in this space. It's just cash is dangerous, and they need a solution and a fix. So we came up with a series, one SEC filing that we did, 2 different digital asset securities, one being CERES coin, which is a stable coin, and then for the investors, CERES token, which is going to again be that third ever SEC qualified digital token. When we talk about the stable coin and how it works, stablecoin is basically a compliance tool for banks, regulators, operators, taxing authorities in the industry, so that every transaction using our coin will post to a ledger. We'll be able to answer all the questions: who, what, where, when, how much, the nature of the transaction, and is this transaction aligned with normal activities? And the other part is our smart contract to be able to pay taxes in real time and to be able to file suspicious activity reports in real time. How the transaction network works, again, CERES coin, once as soon as this filing gets finally processed by the SEC, we will be the issuer of that stable coin. All coins will be backed by USD right now, but we could use any currency to do it. We collect 200 basis points coming in, 200 basis points coming out, and then as the coin is used throughout this permission network, we're able to post all the transactions to that network, so we have unmitigated transparency for everyone. How our investors then make money is that we're going to be selling our investment token as part of our Reg A Plus offer. It's a $30 million offer that will be qualified to be able to sell at retail. We just described how they'd be making money off the transaction fees from the coins. We also have a real estate lending business. Right now, very difficult in the cannabis industry to get debt financing. We fill that spot. So again, we almost function like a REIT with part of that business. Be able to put out capital probably, and I put in our models at about a 10% interest rate. Right now, the normal credit facilities for really high level cannabis companies is about 13 to 15%. So I'm a little conservative, I think. And a nice comp for us is, we'll be able to put out about 30 million of these loans. In 2016, Innovative Industrial Properties raised 60 million doing these type of REIT loans to the cannabis industry. They now have a market cap in excess of 60, in market cap in excess of 1 billion. With our coins, we'll be collecting a transaction fee, which again will feed into our token holders. So we'll be doing seed to sale tracking, but also have a payment system. Right now, a good comp for that is Akerna. They're one of the leading seed to sale trackers, but they don't have a payment system. They have a market cap that right now approaches $100 million. Again, when we start out, we'll be able to have a token that will have a revenue stream because we'll be able to do a lending business. And early on, the lending business will be the primary source of revenue. But as we scale up and gain traction with our CERES coin stablecoin, we see that the revenues from the coin totally dwarfing the lending business. Just a quick financial projection. That's based on, again, we start with a 0.5% national penetration rate based on sales in the current industry and only increase that up to a max of 5% by 2024. What we've done so far, again, 2 years to get this done with the SEC. Blockstack was the first. It took them 2 years. April 2nd, 2020, SEC gave us the green light to file publicly. We are right now a finalist in the state of Rhode Island for the Department of Business Regulations to implement a blockchain system to oversee, administer, and regulate their medical marijuana program. And actually doing the same thing here in Illinois. Just was right prior to getting on the call here, was working with Cannabis Illinois about introducing the same type of program here in Illinois, which is where I'm from. CERES team, my partner, Greg Anderson, and I both graduates of the United States Military Academy. I'm a former U.S. Army Ranger. I worked down at the Chicago Board of Trade for about 15 years. Greg's background is in real estate, and our CTO, Sean McNamara, used to work with a high-speed frequency firm. I think I'm
Thank you very much, Charlie. Thank you.
You're welcome.
So I'd like to ask all our judges to please send me your scores. And I'd like to start with Michael. Michael, could you give your feedback to all the projects and our audience, please?
Hi, sorry, I was just unmuting. Yeah, so I just submitted I just submitted everything. I think quick bit of feedback is probably that I think unfortunately there were a couple timing issues that cut off our ability to see what your business model and the team was. I think so just to give the frank feedback, I think the kind of strongest pitch overall from my perspective was around the cannabis piece, just because I'm just thinking about the device industry, the problems around the medical marijuana industry in the United States. It's real, but it's also a growing market. The business model seemed pretty practical, and the background of the founders also was extremely strong across the claims they were making. On the Mexican real estate piece, I think some of the market conditions would probably affect the ability to be successful in that. And I did think though that at least you had the strong legal structure around how you would actually create the real estate instrument. What you didn't answer was around how liquidity comes. I still think again, depending on the structure of the asset and especially given market conditions, liquidity is kind of a factor of informed investors wanting to make certain risks. So liquidity is a lot harder to create than just tokenizing the asset. And I totally understand the problem being solved, but liquidity is a totally separate challenge in and of itself. And I was trying to see I had difficulty connecting the value proposition there. remind me of what was the first presentation? Just jog my. It was Artur, right? It was the GameHash platform.
The GameHash.
I would give that one in my mind the second place. So I thought the model was strong, right? Like video gaming industry is there as long as you can bring the community. I wasn't sure if I was maybe I missed the detail on how you're actually building the network effect. There's a bunch of there's another company that's doing monetization of your kind of GPU processor. But what I needed to see with GameHash was how you were building a community so that rather than use, I forgot the one application that's out there that allows you to do some of the earning of cryptocurrency mining. But I was just looking for the strong connection back to the gaming community and how you build that client base. But I still felt like there was a strong opportunity. So that's my feedback.
Thank you, Michael. Habeeb, can you join us? Can you share your feedback as well?
Sure. So I'll agree with Michael as far as the strongest pitch, I think being CERES there at the end. I think there was some confusion. You kept mentioning SEC approved, and oftentimes it's touted as merely filing a Form D. But at the end there, it seemed like you hinted that you were going through the Reg A or Reg A plus approval process. So, definitely I think it would be helpful for you to hit that a little stronger, because that kind of liquidity is great. Although I do see potential problems there with your money service business compliance, if you've looked into that. I think the AI platform, so that really piqued my interest, but the pitch focused so much on the founding team at the start that I really wasn't able to get a good grasp of where you wanted to go and what the idea was going to be. And I think you were just about to get into that a little bit more when time ran out. So that's something to keep in mind, because I did feel like you were headed there, and you might have been my favorite, but it just didn't get to that point where I really understood what you were doing. On the real estate tokenization, it was nice and detailed as far as what you're going to be doing. I think there's a lot of plays out there within the same line of business, and I just have a hard time telling a lot of them apart from one another. And GameHash was also, was very interesting. I think similar to Michael, just because you did a good job presenting your idea and what you would be doing, I'd probably put you in second place as well. Although I think the AI platform had a chance of coming up there if we could have learned a little bit more there.
Thank you, Habeeb. Tony, can you share your feedback?
Sure. Yeah, actually, my favorite one was the GameHash, I have to say. Being based out in Asia, I see the opportunity in that one in a big way. And also, I liked how it just flowed, and also it's already built the community and everything like that. I can also see the full circle, as I say. Basically, I can see how the people put money in, create the money, and also get the money out, which is quite important when I look at investing and my client's investment as well. The cannabis one, it's the same thing. It's a great presentation, and especially with the regulation, that was a huge one. I think if you just get straight with that, that would have been a huge one. That was a big one for me, and I'm very interested in both those projects. The Mexican one is interesting, but I just didn't understand why. I didn't understand why. What was it for? What's the interest? The liquidity also was a bit of a concern. It was just like, I think just a little bit more detail. The AI one was the same thing as it's basic. I think you were getting there, but in the 5 minutes, I was like, what do they need? What's it all about? And for me, that was a big concern. It was like, okay, what? I think it's an interesting project, but it was just the opportunity. But great job, guys, I have to say. It's not easy presenting to people over the web, especially in this condition, but great job.
Thank you very much. Jouko, could you please share your feedback with us?
Yes, I think that I agree with many earlier speakers. So that I think that my top two was also GamerHash. I think that it is a very concrete case. Of course, there are still many question marks, but still many concrete ones also, and also the cannabis business, because I have seen also those needs that it's very real need at the moment. And I think that when somebody is able to make it properly, it will be a very promising market. Uh, uh, about the land case in Mexico, I think that I have especially many legal questions that when land owning and real estates and that kind of things, I have seen quite a lot of real estate investing platforms, and it's often that how to make it so that you can really know what you own and how it works exactly, so that it might be great, but just based on this information, it's very hard to say exactly. And then I must agree on this AI part also with other guys that I didn't really get that what is exactly the plan, what to do, and what is the offering. And to be honest, I have been personally involved in many data analytics and AI cases, so that my first reaction nowadays is always that I become skeptical when somebody say AI, when there is so much hype around AI and it is used so much, that I want to see concrete points that what's really going on and what is really the case. And unfortunately, I think that we didn't have time for that now.
Very well, thank you. And I'd like to ask Julio, I'm sorry, Julio.
That was close enough. No, that's okay. Well, I think I mean, I concord with most of the things that have been said. Plus, I am not really a VC, so I don't know what worth my advice is going to be. Anyway, I did like the first pitch in terms of complete pitch. I think it's great. And I had already thought, or I had already detected some ideas out there about using the spare capacity in computers, and it's the first time I see it related to gaming consoles or other devices. I think it's quite clever. Actually making that operational through gaming, I think it's a very good idea. So I thought the idea was very good. I'm curious about how effective can it be in terms of how many subscribers or how many clients do you need to actually be able to mine a significant percentage of what's been mined every hour or every day, right? I don't know, right? Because I've been to Bitcoin mining facilities in the polar Arctic Circle, and it's really a lot of computing power, and those ASICs are really made for purpose. So I was wondering how significant that'd be, but definitely the idea I think is very interesting. So congratulations, I feel it was a very good idea. And I concur with the rest of the points from the other pitches. The only thing I would say is particularly for the second and the fourth, I would I'm being an entrepreneur myself and using or trying to use blockchain technology and tokenization techniques for the things we do. I think it would be better to try to focus on why tokenization solves actually the real problems that you are trying to solve. Like, why is tokenization and blockchain a good thing to use when you're trying to create a registry for land, right? In the case of the land pitch, and why you need a token and all that in the case of the cannabis pitch. I mean, why can you not do this with regular payments, rails or things like that, right? I'm not saying that there is no answer to that, but I think it would be nicer to try to make it a little bit more explicit, right? When you're trying to use blockchain technology and all these things for new business models and all that, I'm always very pessimistic about why is this a good technology for, and what is the real problem that you're trying to solve, right? That's what I would try to make it clear next time. But otherwise, I do agree. I mean, they were really good pitches, and congratulate all of you.
Thank you, Julio, very much. So we have this scores from all our judges, and we have 2 winners for today. It's GamerHash and CERES. Congratulations, Artur. Congratulations, Charlie.
Thank you.
I'd like to thank all our speakers, judges, projects, and online audience for being with us today. Thank you very much. And I'd like to invite Valentin Preobrazhensky for closing remarks.
Elena, thank you for hosting this panel and pitch competition, and thanks for gathering us. That's a light. That's a bigger support for the community and for entrepreneurs to hear insights and hear ideas how to pivot, how to find a business model which can help people in this new pandemic situation. Thanks a lot to projects which pitched themselves, and I hope there will be thousands of our users who would see you and count in your ideas and think about that. And thanks a lot to our participants. I encourage you guys to host this type of events on our new type of venture television. Bring great ideas, speakers, discuss, find insights, find new ways to recover economy. Perhaps this is the way to find this solution for this changing world, and find a way to recover this. Thanks a lot. Have a great day. See you next time.
Thank you.
Thank you, Valentin.